I think what's not working is the just banking on appreciation. If you need that in your numbers in order for the deal to work, that's just a risky play. It's not what people think. A lot of times I go through the entire purchase, renovation, and sale without seeing the houses.
AI will not replace relationship building.
The biggest regret you're going to have is that you wish you have done this 5 years ago.
How Canadians can win in U.S. real estate investing in 2026 without betting on appreciation. Before we get to that, I want to share something a little bit more personal. Cherry and I have been, Cherry's my wife for those who don't know, we've been talking a lot about the future with our kids. It's crazy out there, robots and AI. Anyways, our kids are 12 and 10 now, and both are starting to show interest in earning their own money because we don't give them any. They have no allowance. We're starting them slow. Our son has been helping at events, signing people in, handing out name tags, showing guests to their seats, making sure coffee is topped up. Simple things. We pay him a very small wage, but he likes it. Nothing life-changing in terms of money, though. But he's learning how to show up, be useful, and take responsibility. He's naturally outgoing, very relationship-oriented, so I can already see him gravitating towards business development, hosting, and people-facing roles. Our daughter, on the other hand, she's wired differently. She's organized, detail-oriented. We were driving recently together as a family, all four of us, and started discussing whether she could legally work yet. Instead of guessing, we asked her to look it up on her phone and asked ChatGPT. Turns out in the family business, a child can begin working like below the regular ages. So as long as it doesn't interfere with their school, a child can basically work in the family business at almost any age. Again, my daughter's 12. So we got excited. Note that my kid's income tax rate is lower than our own. So we love tax savings, of course. So this summer, she'll officially join the company. She'll start with bookkeeping and basic accounting support. She won't report to us directly. She'll report to someone else. She'll be expected to do real work and learn real skills. And if she sticks with this through high school, by the time she enters university, she could have 6 or more years of practical accounting experience above and beyond her classmates. That's an incredible start. And honestly, I'm grateful that we even have the option. Because if we didn't own our own businesses, when could a child start working and earning money and learning job skills? One thing I've noticed over my years of networking with successful 7, 8, and 9-figure entrepreneur business owners is that second generation entrepreneurs, when they choose that path to follow family business, they often outperform the first generation entrepreneurs. They grow up immersed in business and investing conversations. They see wins and mistakes. They benefit from built-in coaching, mentorship from the parents, and they have all this runway to learn. If they want it, they start kilometers ahead of, again, first generation business owners, investors. Now, zooming out, what does the future of employment look like for today's kids? It's not exactly comforting. I have a friend who's the head of engineering at one of the top universities in Canada, and he's a parent too, and he's petrified. And that's not exactly comforting. AI is already replacing tasks across industries. Just last week, Block, formerly Square, just in one tweet, the owner laid off almost 40% of the company. And closer to home, sort of, robo-taxis, they're scaling up. Waymo, Tesla, they self-drive and they'll be taxis. This is not science fiction. It's happening in beta mode today. I have friends who keep posting on their Instagram that they're taking these taxis and there's no driver. It's absolutely insane. It's like science fiction, but it's actually real. So if self-driving vehicles materially reduce the need for Uber drivers and truck drivers, where will all those displaced workers go? And if technology continues to eliminate roles faster than it creates new ones, what does that mean for job growth? This leads to the harder question. How much immigration does Canada truly need in a world where automation accelerates? Now, I'm a child of immigrants. I believe in responsible immigration. Immigration played a massive role in saving the Toronto real estate market after the crash of the late 80s, early 90s. The handover of Hong Kong back to China brought waves of new Chinese Canadians, many of who invested heavily in housing and real estate. And that demand helped stabilize and eventually grow our real estate market in Toronto. And also in Vancouver. Let's not forget BC. But today feels different. We've had extremely high immigration levels over the last 8 to 10 years. And it may take, it's taken longer than that. Probably the last 15 years or so, we've had really high immigration levels, each year higher than the previous. It may take 8 to 10 years to absorb that population growth into our infrastructure, housing, and employment. If job creation slows due to automation, what's going to drive demand for housing? If immigration slows, what's going to support real estate prices? If immigration isn't the tailwind anymore, then economic growth and income growth must carry the load. And I'm not exactly convinced we're in a position to do that right now in Canada. That's why I've been quite transparent. I'm not adding to my Canadian long-term rental portfolio. We still have several properties. Instead, my capital is focused on 3 areas I believe that offer stronger risk-adjusted opportunity today. And there's number 1 is what I call 25% down on investing in the stock market. It's a classic real estate strategy of using leverage, but instead the underlying asset is professionally managed stock funds without the headaches of being a landlord. Number 2, single family rental homes in landlord-friendly states like via share. That's how I bought my house in San Antonio, Texas. Also high cash value life insurance policies that provide functional, flexible, private pension style tools while also solving my estate planning problems. And a lot of our clients are successful real estate investors, and they have estate planning problems. Massive estate tax on estate bills that are expected to be paid to the CRA. Jerry and I have all 3, and that's what I recommend to my clients. Diversification across assets that produce cash flow, growth stability, liquidity, and protection. And that's not all. I bought some Bitcoin on Friday as well. But it's a small percentage of my portfolio. This is hardly advice, folks. I don't know if anyone out there recommends buying Bitcoin, but I do. Anyways, I don't pretend to exactly know how the future unfolds. If I did, I would have not paid as much money for Bitcoin as I have. But I do know this. The world is changing. Employment's evolving. Real estate fundamentals matter more than ever. And ownership of productive assets is more critical than ever. Which brings me back to this week's conversation. Glen Sutherland is a full-time real estate investor, educator, and host of the long-time running podcast Canadian Investing in the U.S. for nearly a decade. Glen has helped Canadians break into the U.S. real estate using strategies like the BRRRR, flip, seller financing, and subject to deals. From distressed single-family homes to 100-plus unit multifamily projects, he's built scalable systems that allow him to invest remotely and force appreciation rather than speculate on market growth. In today's shifting market, Glen shares what's working in 2026, why systems matter more than ever, and how Canadians can legally invest south of the border. You can learn more at www.canadianinvestingintheusa.com. Again, that's www.canadianinvestingintheusa.com. Please enjoy the show. Hi, Glen. Welcome to the Truth About Real Estate Investing show.
Thank you for having me again. This is fun. Looking forward to it anyway.
Yeah, I look forward to it too because America is interesting these days. We're recording on February 2026. It is interesting. When is it not interesting? Honestly, won't get too political about what interesting means. But I wanted to catch up with you on how things went in 2025 and what do you see going forward in 2026 with your own investing and your own outlook. And has anything changed with how you invest?
Well, I think I'm not sure exactly what we talked about on the last one, but I think it's ever evolving, and anybody who seems to be struggling is someone who's not adapting to what the market's doing. It's someone who's trying to put a round peg in a square hole, and what you got to understand is as the market changes, there's going to be different opportunities that show up. Like, whenever, you look at like 3 years ago, buying from the bank, that wasn't really a thing. Like they didn't have any inventory, that was all gone. But right now there's opportunities in that, right? So, and then if you go into someone's like, hey, I'm just going to do all foreclosures and short sales, I'm going to all do that now. But in 3 years from now, that might not be the strategy that works at all. Like just as an example, I think a lot of it is just understanding what is working and what isn't working. And it's not even like people like to ask like a big global or, statewide question like that. But a lot of it comes down to like submarkets, even like you go into some markets and they're still seeing some price decreases. You'll see other markets that are flat and you'll see other ones that are booming. Right. And even to go into more micro than that, like you go into like everyone always talks about Cleveland because we're in Ontario, right? So not nice and close, but it could be different from area to area, Cleveland's really a whole bunch of cities put together. So you're gonna see that it's gonna be different from different parts of the same city, right?
So maybe we start off with what's not working. What's not working?
I think let's say let's not say what's not working. I'm going to say what's more difficult.
Sure.
Um, I think some of it is the motion of, like, when you talk about 3 years ago when it's booming, even in Ontario, the buying a property and then expecting it to appreciate, your 5, your 10, your 20% every single year.
Yeah.
That still might happen in some markets. I just had an economist on my show, and he was talking about like an 18-month turnaround based on rent rates increasing in comparison to rent can't talk today, rent rates compared to how the I can't think of the word right. Anyway, it doesn't matter, but it's improving, right? And so
Sorry, which market is this?
As a whole in the United States.
Oh, yeah.
And so you can compare how your market is doing. Someone's been listening to this and just yelling the number out because they listen to my show. But but anyway, it's improving, right? And you can see that things are going better. And if it trends in 18 months, we should be back to like stable markets everywhere. So what was the original question? Kind of got on a sidetrack.
What's not working, and then you clarified what's harder to do.
Yeah. So I think what's not working is the just banking on appreciation. It's if you need that in your numbers in order for them to, for the deal to work, that's just a risky play right now. I wouldn't do it. I do believe we're at the bottom and things are improving. I do believe you probably will see that, but I think it's too risky to put that in your deal analysis at all. And that's one of the things that I'm finding risky. And it also depends on the strategy. If you're going into certain parts of, say, Florida, and there's certain spots that have like double the amount of inventory on the market than they usually do. And if you're going into those markets and you're planning to do a flip, you better have the best product out of everyone, because who's going to buy it? Like if typically there's 2,000 properties on the market and there's 4,000 right now, like how are you? There's only like 2,000 buyers, right? So you're gonna have to have something to stand out. So those are the ones that are going to have, those are like the riskiest strategies right now. But if you say
like catching a falling knife.
Oh yeah, exactly. But if you want to go, say, flip, right? You're like, hey, it's finding a market that makes sense, right? If, timing it out, you're like, I'm going to be doing, say, a 2-month renovation. I'm going to hit the market at this point. Maybe you need like half a month to do cleaning and get ready for sale. Maybe it's about when you're trying to hit, like if you're buying right now, you might be able to hit the spring market perfectly with some numbers like that. And if you hit the right market that is showing already positive numbers for, their days on market, but basically a lot of the trailers are leading indicators for those things, that you're going to be okay doing those sort of strategies. And sometimes it's just doing it in the right market. So it's as a whole, that's kind of where I'm seeing the risk, is when people make assumptions that may not be backed by actual data.
Mm-hmm. Mm-hmm. Yeah. And we're trying to generalize here. It's a pretty big country.
Yeah, exactly.
I was actually just reading an article. I wish I got more deep into it. My memory's not as good as it used to be. It was actually interesting. It was an American article about real estate. It was saying about it was saying how increasing incomes, people's household incomes, is a better driver of housing price than population growth, which I thought was absolutely interesting.
It is interesting.
Yeah.
But
I'll flip it to you later.
Yeah, it makes sense.
I think you generally have both, because if people are making good money, generally more people move into the area.
It is true, but like even so, when I started investing in the U.S., I started in Huntsville, Alabama. Was like one of my first spots. And one of the key indicators to that is that they basically took the blueprint that Texas was doing, which is like giving free land around the cities, right?
Mm-hmm.
Giving no taxes for a certain period of time, and it attracted industry in. And if you get into markets like that, like there's Intel in Texas, there's Intel going into Cincinnati. If you get into some of these markets where they're putting a lot of high paying jobs, like just to go with your income part, they're if you get high paying jobs and you have nice houses, if you're where I'm going with this, if you get houses that are not the right style for what those kind of incomes are going to be looking for, you're not going to be in the right spot.
Right.
But just looking at Huntsville, what happened is they brought in, Toyota, Mazda, Blue Origins. They expanded the army base,
Yeah,
and basically
NASA. Yeah,
NASA. It grew, and the thing is, the population is only like 200,000 for Metro, and you're like, we need jobs, so people have to come in, and it creates almost what we had in Ontario like 3 years ago or 2 years ago, where there's no vacancy, there's no houses, your tenants can't afford to move anywhere else because the rent's higher, right? So they're going to want to stay where they are, which is, it's a little bit of a different, mindset than in Canada. Like, I want my tenants to stay forever. I don't want to do tenant turnovers because I have the ability to do rent raises each month or each year, right? As it renews. So yeah, I think it's just being ahead of things like that.
yeah, and yeah, I'm just sharing my screen just to back up what Glenn's saying about Huntsville, Alabama. The nickname is actually Rocket City. I don't think many Canadians understand how many high-paying jobs are there. One employer we left off was Boeing.
Yeah.
With all the investment in military these days, I think Boeing's likely doing well. I'm not that familiar with American self-defense companies, but I believe Northrop Grumman is also
Yeah.
well, literally it's defense. So lots of really high-paying jobs. So are you still in Huntsville? Like, sounds like I've heard only good things about the area for investment.
Yeah, no, I still have properties in Huntsville. The hard part is getting into Huntsville, right? Because, it's the same sort of issue I had with Ontario in the past. Like, I used to live like over in Cambridge, and I used to buy properties in Cambridge and over on the other side of London. And off the start, you could buy like a semi-detached for 200,000. Maybe I think some of my first ones were like 150 and 180. Then I got to
The good old
200.
days.
Then it was 300. Then it was 400. Then it was
Yeah.
like, and if you didn't when you own the property, you're like, this is incredible. Like, this is,
Yeah.
these are, great appreciation I made. But if you're trying to go in there, and I was like, I'm going to buy the same house, like two doors down from the house I own or used to own, and I sold it for, $250,000 like 10 years ago. And now they want, 600,000 or 700,000 for it. And you're just like, my mind, I just can't do it. And sometimes I'm having that same problem in Huntsville, where you're like, some of my even cheaper houses that I bought for 40 grand are now, I have to buy them for 150 grand for the same house, right? It's it's just a hard sometimes if you've been in that market for a while. If you're new coming in, you're like, hey, $150,000, that sounds like an okay place, right? And I'm talking more of 35810, which is like more of the middle of the arc in Huntsville. And that could be perfectly fine for you. You can rent that place for $1,500 a month, get your 1% rule, which I hate that number. But you could go and do that, and you can still be fine with it. But the hard part is if you've been there for a while and you're like, those were like, back in 2017, 2016, you used to be able to buy those for like $50,000, $60,000, $40,000. And now to pay that much is challenging sometimes. Yeah.
Glenn, I think we should probably take a step back. Could you explain to the listener your investment style? And I use investment style as kind of like because you're a business owner operator, like you're an active investor, you're full time. So I want the listener to understand, like I'm a boring investor and it's a buy and hold. I'll BRRRR, but I'll hold.
Yeah.
Can you explain for the listener your strategy?
Yeah, so we do a lot of different things, but at the core of it is just forcing appreciation is really the main thing. So it is a lot of like some people that's not appealing to, because it does mean like typically the biggest discounts you're going to get are the properties that are in rough shape, right? The ones that the biggest discount, like when people are really willing to let their property go for substantially less than what it could be worth after a renovation. It needs HVAC, it might need structural, it might need everything. So basically we're looking for stuff,
the stuff that the banks won't touch. They won't give you a mortgage on. Like most people won't touch this.
Yeah, it's not, a lot of times they don't even go on to you're buying from wholesalers or direct from the seller, because realtors don't want to touch them, right?
Because they won't sell on market. So it's perfect for you. It's perfect marketplace for you.
Yeah. But you can buy those, and it does take a lot of it is just setting up systems for it, but you can buy these things even from a distance. There is a lot of people that call me afterwards to try to help them when they've got themselves into pickles, but a lot of it if you're doing this right, it's going to come down to a lot of the planning you do before. It's like how you have those contractor conversations before, how you're discussing draws, just everything. The whole thing is planned out in super detail that the contractor is annoyed with how much detail and how much thick your contract is. Because if something goes wrong, you want to have recourse to be able to sue them. You want to do civil suits. You want to go after their insurance. No matter what you do, you're going to need to have all the proper documentation to do it. But anyway, go back to your question. We buy stuff that's distressed. We buy from banks. We buy from basically anywhere we can find the property. We do a renovation, and then if we're going to keep it, we do a refinance. If we're going to sell it, we flip it on the market. I do sell with a realtor on the MLS on my exits. In 90% of the situations, like I do have some on my website that I sell privately as well. And sometimes it just comes down to what it is. So like when you're selling it privately, it might be that it's a duplex. And so it's not a homeowner that's going to buy it. It's more of an investor. And so if you have connections to investors, you don't need to, pay a realtor. So sometimes you can do that way because that's what they're looking for. But like single family homes, those will go on the MLS. As of the last couple of years, we started into the multifamily too. So for years, I've been buying, duplexes and fourplexes. But we started into the 20 units, the 100 plus units. So we've done a couple of those, and had to go through all the fun of registering with the Securities Exchange, paying attorneys a lot of money to get structures set up, and it's not the regular kind of structures, and so doing that kind of thing as well. But as a whole, it's finding something that I can force the value on. I'm not looking for an appreciation. I'm honestly looking for something that I can turn the money around fast. And honestly, that's one of the problems with doing the large multifamily is the speed of the money. I think a lot of investors are more interested in, honestly, the smaller stuff because of the turn. The hard part is it's so much easier to find 100 unit than to find 100 houses.
Yeah, way more friction of doing 100 transactions and negotiating 100 deals versus negotiating one.
So many contractors and so much everything, right? So much organization. So sometimes it's like people saw a lot of the stuff we did recently and they thought, oh, are you leaving single family? And I'm like, no, but I think that like doing single family will generate quick income, pay for your house, pay for your mortgages, pay for stuff like that. And then where you're really going to get wealthy is doing those large multifamilies, but it's going to take some time. And you typically, as the operator, are getting paid last. So, in a capital stack, it's usually you at the end. You might get paid your initial investment, like if I put deposits down or things like that, money that for surveys and all the different things you're going to do off the start. You can get that back, but typically I get paid at the end. So it's hard to live off of getting paid 5 years down the road. So you need something that's generating income right now, right? And even though I have a coaching program, that's not the idea. The idea is to make my money from my real estate. Like I want to survive off of the real estate with that.
So all of this you're doing remotely? How often are you in the States?
Rarely. And honestly, even a lot of times when I go down there, it's not what people think, where I'm not like walking the houses. A lot of times I go through the entire purchase, renovation, and sale without seeing the houses or having and it's just having, property managers, contractors, just a whole team of people working for you. I don't a lot of times when I went down there, I took down some students last summer and jumped in, drove down there. And then I remember going to the house and I'm like, yeah, I live, one of the houses that where we just flipped, we have a tenant in. It's just up here somewhere. And I'm looking at my phone trying to figure out what the house number is. And they're like, you don't know what house it is? I'm like, I've never been here before. I don't know. I'm like, they all look kind of the same here. I'm like, which one is it? I don't know. And I think what it comes down to is just how well you set up your systems before you start. Otherwise, you're going to be overwhelmed. And honestly, that's what I started. I started with, buy a house, you start the renovation, you get a joint venture, you can go do the whole project. And then you're like, hey, that one went really good. So you're like, let's do 2 now. And then like, okay, now that went good. Let's do 5 at a time. Let's do 10 at a time. And you realize quickly once you start hitting like the 5 or 10 at a time that you're starting to get really overwhelmed with everything that's going on. And that's where you had to like, okay, let's slow it back down a little bit. Let's build a system so that this is a little bit more organized before we push again. And so that's what we did. And so we scaled it back, got it more organized, got a lot of the stuff that you realize now is an issue, but you didn't think was an issue because you're like, that task doesn't take me that long. But, multiply it by 40 houses, 50 houses, and you're just like, this is a full time job. Right. So, and then parts of it was I hired two virtual assistants and they manage parts. The hard part with them, I'm kind of going on a long rant, but the hard part with virtual assistants is trust, right? Like I don't give them banking information. They don't log into bank accounts. They have access to more general things because I've never met them. I haven't done a background check on them. They didn't pass any sort of thing, and they're in completely different countries. Like
Yeah, you have no recourse.
I
Right.
have no recourse. Like I'm not going to fly into Mexico and try and track them down. That sounds like crazy people. Like that's not what's going to happen. Yeah.
There's got to be a solution for you. But what you mentioned earlier about
I think it's just if you're going to depending what you're doing, you just have the proper VA. Like if you're going to need one for accounting, hire an accounting specific one. Maybe they have designations and something that would be on the line, right? Yeah.
I probably know someone for you where they have the control. Like it'd be an agency, but they have the controls in place.
Yeah. So honestly, there's certain things I still do myself, and there's things that I find that, just even, doing my podcast, I can have someone else upload it. I can have someone, go to take the transcript and have ChatGPT built the 2 paragraphs, all that stuff. Like that's not stuff that needs to be done by me.
Right. Well, here in Riverside, it's the recording's already in the cloud, so my team has access to it.
Yeah.
But to your point about, your students were surprised you've never seen your property. People need to understand like the scalability that's available in the States that's not here in Canada. It's just totally different that you can like people say to me like, oh, I can't believe you're investing in the States. Your clients are investing in the States with all the things going on. Like I never left home. They didn't leave home either.
Yeah. And honestly, even when I have crossed the border, there've been all these stories, but I think that when people get into problems at the border, there's an underlying reason or issue that they got into, that they were stopped at the border. When you hear you see like stuff on the news, I'm like, when I cross the border, I don't have issues. I do have a visa. I do have a social security number. I do have a driver's license in the US. I don't need those things to invest in the United States. You don't need any of those things. But it is helpful for, lending, for taxes, for a lot of different ways of doing things. Yeah, I don't know. You don't need all this stuff. And it is available.
Okay, before we get into that sort of stuff, I want to ask, so you talk about systems. Can you maybe talk to some early systems that are really important to for a new investor that's going to the States? Because I want people to understand like you're an organized person. You're an engineer by trade, right?
Computers, so not quite. Right. I'm not gonna.
You're one of those organized types.
With the engineer logo, right. But yeah.
Dave Ramsey has I saw a wonderful clip about Dave Ramsey. What are the careers? What are the careers of millionaires?
Yeah.
And I believe it was engineer, teacher. I forget what the other ones were, but they were all people that were organized.
Yeah.
Right. Would you agree you're an organized person?
No, I would agree. Right. You know what? I would agree that I'm pretty organized, and I think a lot of it is to just be able to recognize when something isn't organized and realize you need to organize it. So I think that I'm ever evolving, organized. So I think it's ever changing.
Right. And what I'm saying without saying is all those people that are in the news who went under, they were not organized because their places were sitting vacant while they're paying 16%, 17% interest.
Yeah.
The renovations weren't getting done. The renovations aren't getting done. It's definitely not tenanted. You don't have money coming in. So they weren't organized. My point is, if you're not organized, like these things are complicated.
Yeah. Like you need something in order to be able to check it. And sometimes, especially when you're starting, it can be simple as a checklist, right? Like, hey, if I have, 10 properties to start with. And you're just like, I need to check all of these things every single month, right? You have a set date. You're like, hey, maybe I'm going to do this on, say, 20th of the month. Like you should be starting evictions before then anyway. Or it could be the first of the month. The thing is, you might not have all the rent, or maybe you're doing the 31st to be a month behind. But you need to be checking, like, go into each property management portal, check each property, see what's going on. And because you need to know what, property managers typically have, what do you call it, like a reserve amount where they're allowed to spend up to $300 or $500 or $1,000, whatever you signed in your PM agreement. And you're like, hey, there's a $500 repair. And sometimes the property manager is very specific about it. And it'll say, this is for, electrical repair or something like that. And sometimes it's just as repair. And if you have money partners, you should know what that is, right? You need to define that. It's not okay to just go, there was a repair and I don't know what it was. It's like, sometimes mistakes happen. There'll be like, all of a sudden utilities on your invoice, and you're like, because the property manager is handling the utilities for the tenant, and it depends on state specific. I know in Ohio, a lot of times owner pays the utilities, tenant pays it back, and also keeps it on balance. But let's say in Alabama, just if they made a mistake and all of a sudden the utilities are on there, because usually the tenant handles the two utilities completely on their own, you don't even see it. You just need to be able to call and check, and they say, hey, this shouldn't be on my bill. And if you wait until the year end and you're trying to get something fixed from May, it's not good. It's not going to work right.
Be organized. Watch the numbers. Negative cash flow vacancy is poison.
Like what I've done is, even like to close a property, what I wanted to do is make it as organized as possible. Because even if you've done this a lot of times, especially if you're doing two properties at the same time, you're like, hey, I got an insurance quote, but maybe you forgot to pay the insurance. Did you, you got to go all the steps. You're like, get the quote, pay the insurance, file the insurance. And so your checklists are going to be accurate, or lengthy and overly detailed. But then, I like to do it all on my computer for like, basic checklists for closing and stuff, just to make sure I'm on pace or didn't miss anything. You could print them off if you're the kind of person who just wants to see it on your wall, and you can like, hey, there's all these check boxes, but there's one missing. And you're like, that's what I need to do. And I think that's the way to start by getting a good checklist of details. And if if you've done some investing in Canada beforehand, you're going to have a lot of the ideas. Your checklist might not be as specific off the start, like just, hey, I'm closing on a property. You might not like have all the lending documents that are required to do a loan in the US, because it's going to be, slightly different than doing it in Canada. So it might be some, intricacies, but I think it's as you do it, update it. Keep updating the sheet. I think you should set aside time in your schedule to continue to go back and update everything. Like for me, I have a service operating procedures, how I do everything, what all the tasks for my VA, and I want them there because sometimes I'm like, hey, I haven't done a short sale in a year, and I'm like, okay, let's just go through my checklist and my details I've built when I did this last time, because you're like, oh yeah, they need this one extra piece of paper. I need to file this other thing with the city instead. There's little intricacies compared to just a traditional purchase. And so it's about being organized and keeping building it. I have a student who just did a call with me this week, and his goal for the year was to create a new SOP, or service operating procedure, every single week for the whole year. And he's like, if I do 52 of these, I'm going to detail the whole thing, right? And so as I'm going through everything, like when I went through for my E2 visa, like I walked in, I did the interview at the consulate. And when I walked out, I pulled out my phone and was typing all the notes, all the questions they just asked me, everything. Just because then it's repeatable. If you have all of the information, all the questions, like they might ask some different questions, some other people, but it's going to be pretty similar. Like it's supposed to be standard. They're not supposed to be.
Hopefully it's standard.
For instance, right?
Hopefully I'm not making these questions up.
But no, a lot of the stuff is repeatable. So as you do more of these, as long as you just keep updating it, you keep going, then your system will get better. And then as you progress, you're like, hey, I'm going to, maybe I'm making enough money now. It makes sense to put a VA in. It may make sense to pay for a CRM to manage it. And even a CRM, it's one of those things you do a head toss on, and does it make sense because you're already paying a property manager and they have a CRM. So you're now taking the stuff from a CRM to put it into a CRM, or exporting and importing, and you're like, what are you doing, and what's the point? What's the objective you're trying to get by paying for this extra software? So yeah, a lot of times I'm like, I don't want people to pay for stuff unless they're making enough money. So I think a lot of it is just, finding ways to do stuff cheaper, like finding ways to get even your corporate structure set up at a better price. Because if you're going to do it repeatable, and then you can ask for discounts. And like if you have a coaching program, you can ask for discounts, because you're like, I'm going to set up, me or my students, we're going to set up 50 corps this year. So, can we put a price, can we switch the adjustment on this? Because it doesn't, and the thing is, they're open to that because there is a volume. Like, they're going to make more money by you being a customer with them.
So, in a nutshell, to the listener, Glen is organized. Fair?
I think so. And like I said, I think it's ever evolving. I think that you're constantly going to find that there's holes. There's
Yes.
always going to be holes. And if you think you know everything, or you think there's no
Oh
holes,
God,
then
doomed.
then you're gonna have trouble.
Yeah.
It's like,
Only
I'm
con
constantly
artists think they
buying
know everything.
education. I buy education from other people too, right? Because it's like, and even I want to do something bigger. You're like, I want to go buy a multifamily. Before I went and bought the first 100+ unit building, I went and hired a coach, because I'm like, I'm not losing other people's money. Like, I haven't been doing that, and I don't want to do that. So I'm gonna try to prevent that from happening. Like, the best my ability is, I think that the investors expect that, that you are
To not lose their money, yeah.
and to continually educate yourself, so that you're, that there's not some sort of thing like, you're like, hey, I just assume all these things work, but there's always someone more experienced than you, and if you think you're
Right.
the top dog, then you're naive.
Do you want to shout out who your coach was?
Not really. We had to let him go. So, not to go into a whole thing, you can probably figure this out. So he's a big guy out of Texas, and he has a whole coaching program that's massive. And what happened was, he let two of his large buildings go into foreclosure in the last 2 years. And because of that, he was supposed to co-sign my loans, and he couldn't do it. So I had to hire another person. So I don't want to give, I was almost just said his name, but I don't want to give him any shout outs or anything.
Worst case, we could have edited it out, but
Yeah, I'll tell you after.
Appreciated. Yeah, yeah, because people always ask me for reference checks, so it'd be good to. So just quickly, what I wanted to share. I mentioned earlier, Dave Ramsey was sharing the top careers of creating millionaires: engineer, accountant, a CPA, teacher, management, and attorney. Which is, it's also interesting that it's people typically think it's executives who are millionaires, but it's actually it's these folks, and because they're good investors, and you're a good investor, you're organized, you can be a good investor.
Yeah, and they're also, like, you look at it, engineers, CPAs, they're used to doing the work. Like, these are the people that do the work. And I think even when I have students in the program, the ones that are most successful is when you say, hey, let's meet back up next week. I'm going to give you a task or two tasks to do. And you're like, you need to call this person. This is the kind of script you need to ask them to make sure that they're going to be what you're looking for. And if they come back next week and they actually book the call with you, and they actually show up and they actually did what they said they're going to do, they're going to be successful. And you're like, well, Glenn, that sounds really obvious, but you'd be surprised how many people don't actually go do the work. And sometimes it's super easy. Sometimes it's a call. And sometimes, in today's society, people don't like making phone calls. And even if it's just to talk to a contractor or a property manager, or like someone that I'm even referring, I'm like, this is my contractor, go do the call with them. And because you need to, like, even if they're verified, if you take nothing else out of this podcast, if someone has referred you, a contractor, property, any sort of team member, you still need to do your full due diligence, because if you don't, you're not going to typically aren't going to get the same results. When you set up those initial calls, you're setting the tone of the relationship, how it should be going, how the expectations are, how you're going to pay them. Because we're Canadians, we don't have all those, Zelle, Venmo, all this stuff. Like, sometimes they're expecting that, and so you need to have those conversations ahead of time. And if you don't, you like if you say I need to have a meeting every week, if you wait until the project's going bad and then ask for a meeting every week, they're going to say no. Like it's a lot of it is planning this ahead of time. And I said that at
Yeah.
the start of the show.
AI will not replace relationship building.
No, it
Nothing
won't.
will replace relationship building.
No,
Yeah.
no.
And paying people on time. Nothing replaces that.
What you just hit the nail on the head. There is so many people involved in that, and it's the hardest part about doing real estate is it's not like buying a stock. You're talking to a lot of people that are making this work for you, and what can easily happen is someone who's even performed for you for many years can something can happen in their life. They could get divorced. They could get, whatever. It shakes even your business because you've brought them in as an integral part. And what I've started doing every time I go into a new city is having, dual teams, two property managers, multiple
Right.
contractors.
Redundancy. Yeah.
Redundancy, because it you don't realize you need it until you need it.
Yeah. Yeah. My kids listen to the Jocko Willing podcast. So his saying, I think the Navy saying is 2 is 1 and 1 is none. So basically, if you don't have redundancy, you have nothing. You only have one. You only have one weapon. You have none. Essentially, is what they're saying. But yeah. Anyways, yeah. Hopefully, people are taking away good stuff from this podcast because
I think so. I think we've thrown some stuff out there.
Fabulous. Let's talk about your outlook for America, because again, our news is filled with Trump and protests and Venezuela and Greenland. People, Kevin O'Leary has repeated it many times, and I appreciate what he says. He's saying how you need to separate the noise from the signal, right?
Yeah.
And I actually think the stock market's kind of separated the noise from the signal. I was because, like, for example, Trump threatened Canada with 100% tariffs because of Mark Carney's speech at the World Economic Summit. But then the stock market actually went up on Monday. No one listened to what he said. So separate the signal from the noise. What do you see as the signal? What do you see as the trend direction for America? Are you gonna, pull up your tent pegs and leave America for investing?
No, I'm not like it. If we're going to go into like the market, like I said before, it's improving. Like things are going to get easier. Different things are going to get harder. The market, the U.S. market, it just has so many advantages that I can't do here. I did an episode with Kayla like a couple weeks ago, and I see that Bill 50 is going through, and things are getting. There's some improvement, but there's just it's a lot easier to operate, and I can do things I couldn't do. Like I can go like look up a house and I can see who owns it, what their mortgage is. Like all this stuff is public record. I can make better seller financed offers. I can just understand what I'm doing a lot better. It's not all hidden, right?
Yeah, it's easier to run a business.
Yeah, it's easier to run a business. They are much more pro business. Like, not to like, we're not really answering your question with like what's going on right now, but it's always easier to run a business. The taxes are lower. That's one of the reasons I got my visa, but like, you can control a lot more things, and there's a lot less hurdles. Just, getting permits quickly, getting inspections. Inspections can be a mix, but but permits, for instance, like just getting permits, getting drawings, like it's a lot of this stuff is not being financing, it's not being held up. No limit on the lending, and I do get it. And that's one of the things that is kind of misleading because we are talking, when we're saying, oh, there's infinite lending, we're more talking about DSCR products, not like traditional products where you, like, for myself having a visa, and if I went into like a Wells Fargo or stuff, I'm going to run into some limits in those. If you start walking and talking and looking like an American, even though you're a Canadian and live in Canada, you can start getting into the US products that are truly American. But anyway, that's the one distinction. It is a little bit different because when you're doing for lending, but it's just going to be a lot easier to run a business there.
Right.
The way they set up their structures, just everything is quick, fast. It's moving. Anyway, Where do I see
Sorry, Glenn.
it?
Like Scott Dillingham was just on my show, and he was telling me because I was asking about what's CMHC like, what's lending like on apartment buildings here in Canada, and he says he tells his clients prepare for 6 months. You're doing buildings in the States. What is the expectation for a financing condition for a, I don't know, 10, 20 plex
Well,
or
it
100
is
plex?
commercial financing still in the US. So it is it's not as fast as like a residential loan, like to be, you know.
There's a lot more diligence to do. I'm not surprised.
Yeah,
I'm
so a
happy to
lot
hear
of it
there's
is going to
diligence,
be,
time for diligence.
yeah, it's going to be even myself trying to slow this down. Like if it was a single family home, I'm buying it as is, I'm not doing inspections, I can go close those things with you know, like with Scott, for instance, in like 2 weeks, right? I could do something like that. You could possibly do that. But, you can't. I'm just thinking if you could possibly. Honestly, whenever I'm doing a multifamily, like the 20 year, like you're talking about, it's going to take a while because you're going to want to stretch this out. You're going to want to get into every unit. That might not be a 1 day project, right? You're good. There's going to be specifics that are needed depending on where you're buying. There might be soil samples. There may be flood zone maps that need to be found and disclosed to insurance. So even just getting a lot of that stuff set up is going to take a little bit more time. But yeah, typically we're looking at like 90 days, and it's not necessarily because of the lender. It's that we want that time in order to do it. We want
Wait, so
time to raise money.
financing is not the bottleneck. You're
Yeah,
saying that's
financing's not.
incredible.
It's that I need to raise the money, right? It's in a lot of times I'm like, I need the time to do the webinars. I need the time to do the follow-ups and talk to people. And I need time to, these aren't quick calls. I'm like, I want to explain risks. I want to, like, if they don't, you're investing with someone and they haven't told you the risks of this,
Run.
yeah, but you want to have a good conversation with each person. And even sometimes that's not the first call. Like sometimes it's, not to get into this too deep, but like even still, your first call shouldn't be even talking about a project. You should be building relationships for ideally a year or even
Yeah.
more ahead of time,
Yeah.
having conversations. But
And,
yeah,
and it's both sides, right? Because for me, if I want to work with a client, I need to know that they're not going to be freaking out if there's a market correction and calling me in the middle of the night.
yes.
I need to know that they're like emotionally, they're cool. It's not their last 50 grand, whatever it is. Like they can, this is truly, they can afford to not see that money for 10 years.
Yeah, that's hitting the nail on the head. And like if you're asking financial questions, they're not comfortable providing that information usually.
Ooh, red flag.
No, like because like even for myself, you're like if depending on how they're investing, if they're using their home equity line of credit in Canada or if they're using cash, it's just they're a different kind of investor, right? If I can invest in your 506C, which means that they have to be accredited. Like, some of those things, a lot of times I'll push them to the website, which will, they can, check this, check that, and it can tell them where they are. And it doesn't have to actually involve me knowing that. And at the end, maybe I just get an email that says, yes, they're accredited or not accredited. And I don't need to see all the information, which I think is fair. But anyways, like financial information, it's not something that people want to provide to a stranger at all. No.
You're not going to be strangers, though.
No, you're working
You're in
with
business
people.
together.
Yeah. Yeah.
And you want to make sure that I go be a silent partner in this business. All right, Glenn. What do you like about the apartment building business? What do you like about the investment? What are some things that investors need to know about this area of real estate investing?
Honestly, I not to try and give the same answers that everyone else gives, but I have so many single family houses, and it's to diversify that you use different property managers, and just logging in, logging out, each even, you're working with Bob's Property Management. I don't know, that's not a real company, but you're working with
It probably is one. I can Google it and find it.
but you work with this property manager, and even still, like a lot of times they're not going to have it all under one login, and you're going to have to log in and log out and log in and log out. And just having like one spot to log in and see in your 100 units in one foul swoop, and you have more pull too. Like, so you could have a weekly meeting because you're like, they might be open to that. And as with single family, they're typically not really excited to do weekly meetings with you unless you have a lot of properties. And I have had property managers that do it, or they do it for a while and then they really don't want to do it anymore, right? So I think just it's the scale of everything. It's that you can have every unit painted the same, right? And sometimes the thing is, with that point, if you're working with a big property manager, sometimes like if they've done the tenant turnover for you, they've painted the house with their paint, right? And so sometimes, like I went well, that same one. I was down in Alabama in Huntsville, and I went in and visited them, and I walked through their warehouse, and they just had like they buy like the like I don't know what those big jugs are of paint, like massive ones, like barrels, and they had pallets of them sitting there because they put the same paint in every single house. They have the same tile, and sometimes you can get that into your single family homes, but not off the start. It's not you're typically buying it with something already in there. So the thing when typically they go build a multifamily, they're going to build every unit the exact same. They might be flipped over. There might be some that are studios, some that are 2 bedrooms, some that are 3 bedrooms, some that are 1 bedrooms. Um, but it's going to be more standard that you can just fix stuff. You could have a room with a bunch of tile in it. So when someone breaks a tile, you're not retiling a whole floor because you don't have that tile, right? So I don't know. I like the multifamily too, for the capital stack. In the end of it, you will make a lot more money than investing in a single family home, but it's going to take a lot more time. If you want to invest in a single family house, you can turn your money in a short period of time, 3 months, 6 months, start something else. But I don't know. It's just different kinds of investors, right? It's a whole lot of people pooling their money together to do something bigger, right? And when you do something bigger, those little changes can make you apply it to a cap rate, and you can create a lot of income from a rent raise of $50 across the board on 100 units. It creates a lot of extra value in the property, right? So it's a lot of scale things, and like just talking about the valuation, the way it's done, right? It's based on the cap rate of the area instead of based on what's going on around you. And if you have, like, I just had an appraisal done, and I had like 6 comps, or 5 comps that were good and 1 comp that was bad, like real bad, and then it just changes the whole value because they do an average across them, right? Whereas in the property, in commercial, it's going to be, well, how is this what's the net operating income on this building? Like, how well does this perform? Apply it against the cap rate, and that's your value of the building. And so it's actually based on the performance and what you're doing instead of what is around you.
Glenn, do you have any hurdle rates you can share? Like, what are the certain metrics that you're looking for in order to, if you're willing to do the deal or not?
So
like an IRR or a hurdle or a cap rate or.
Yeah. So, well, if you're doing multifamily, like minimum, you have to be able to pull something off that people are interested in investing. So you're going to need an IRR over 8, honestly. Otherwise, your numbers aren't going to work. And if you fiddle with your numbers to make them 8, then
oh boy,
because that's what you're like. I love this building, and you're like, well, maybe we could move the capital expenses down. And
this is where you need a coach to call your bullshit. Yeah, quick hook in the books.
Yeah. Well, then you're just like, oh my God, you're in a different problem later, right? So you don't want to do that. Basically, you're going to look for. I haven't done any underwriting in the last like 6 months for multifamily, but we're looking for over 8 is the big one, right? Because if you have that, then you can start working, backtracking this or reverse engineering to see if this is going to make sense, right? The hard part is, like when I buy single family, I love like vacant buildings. I was looking at a 20 unit that was vacant in Columbus, and it's like impossible to get lending on, right? So so you're also looking at occupancy rate, right? So because really, if you ideally over 90, maybe over 80, you can get this, and it just gets harder and harder if it's vacant. It's so much risk for the lenders, right, to invest in a vacant building. So
I imagine that's where the deals are.
Yeah. And that's what you think about it too, the scale of
Like,
it,
what
right? Like,
happened that it was vacant?
well,
Complete
yeah,
100% vacant.
100%
That's
vacant.
insane.
So what I believe happened in that building is that they evicted everybody to do the full renovation and then to sell it. And they thought, oh, it'd be more valuable if it like was vacant, so that people could put whatever tenants they want. They weren't inheriting problems and everything else. But then
That's a hell of a
really,
business risk.
yeah, but basically, if you go do something like that, you better be offering seller financing, or some sort of carryback, or like what do you
Doesn't
otherwise?
sound like a good practice for selling.
No, it doesn't, because that's the people who want to buy something that's running, right? And ideally, you're going to want a T12, right, to see that it's been running well for 12 months.
These folks should fill it first before they sell it.
Yeah.
Fascinating. Oh, and I did Google Bob's property management. I found Bob's property maintenance in Brantford, Ontario. So shout out to Bob's property maintenance in Brantford, Ontario. So Glenn, you have coaching students. What do you tell a coaching student who hasn't bought a multi in the States before? What is the expectation they should have?
So I should clarify this right off the start. So I don't coach multifamily anymore. So
Oh, okay.
I used to have a program. We won't drop names, but I had a multifamily program that I was running with two other guys at from one guy from Vancouver, one guy from Edmonton area, or no, Calgary. But and we were doing it. They were all U.S. investors, and so we were doing that together. But I switched it back to so I do 1 to 4 residential in my coaching program. Just
Okay.
yeah. So
Okay, let's just change the question then. What should the expectation be for someone looking to do 1 to 4 units?
they they should be expected to, if I give them some work, they do the work, and then we're going to get to the goal, right? I had the way my coaching program used to work was that I just teach them everything, and then I'd go do it, and the success rate wasn't high enough, right? Like, because people just they don't go do stuff on their own. There's fear, this different country, there's so much stuff. And I changed all that. So I'm like, honestly, I switched it so it's all video course now. And then we do all of our time one-on-one. So instead of spending time teaching them, spend time implement. That makes more sense, right?
Hmm.
Like, watch the video, let's sit down and do some deal analysis. Watch the video, let's do some market analysis. Watch the video, let's fill out do a seller, let's figure out how to make an offer on a seller finance property. Let's just do it like that. So expectations is you should be able to, like, complete the course, get a property done in like 4 months. You should be able to do that. And I find that some people that just, once they realize there's any work involved and it's not just going to be handed to them on a platter, that sometimes those are your investors, or they'll work with somebody else in the course. And I think it's about keeping communication with the students and
Right.
figuring out that they're struggling, and why are they struggling? Is it that they aren't actually ready to do this? And then you go, well, what would you want to work on somebody else's project? Because I get to see all the students' projects. I'm like, I think you'd be a good fit to work with. We'll use Bob again, but go work with Bob. Bob has a project that's just like this, or sometimes it's my project, sometimes it's other projects, and that way you can go and tell people, like, the success rate's so high because if you aren't going to do it, then go do this. And I think also the putting some barriers up before they come in is a big thing. So even when, instead of just taking anyone who wants to come in, you have a call with them and you say, hey, this is what it's going to involve. This is what kind
Yeah.
of timeline. And if you can't do that, like, it's hard to say this, but we don't want you here, because it's not, it's first of all, it's
You
not
won't be
good.
happy. You
You won't
want
be
to achieve your
happy.
goal. You won't be happy.
You're wasting your money. And honestly, it's even going to hurt my program, because you're going to take the program and then you're not going to do anything, and you'll say it doesn't work. And you're like, well, it's because you didn't do anything. So I'd rather have
Mhm.
people that are going to do stuff.
So what? What are some of the things you have in that initial call? Like, is there like a weekly, hourly expectation? For example, like I'm a big fan of Warren Buffett. For example, he says if you're not willing to invest 15 hours a week in studying stocks, you are an amateur. Just go buy the index.
Yeah.
I kind of think the same thing for especially novice investors who still have like a day job and want to do this as a side hustle. You got to
Yeah.
invest some time. Especially if you're in Ontario, because you know that saying. We have the saying in Ontario, right? If you don't learn, like Landlord Tenant Board, our Residential Tenancy Act, the tenant will teach you. Which would you prefer, to learn it yourself or let the tenant teach you?
So yeah, no, we do calls as regularly as they need them, right? So some people are going to work fast. They're going to do get through a lot of videos, and then they're going to want to do a lot of calls because they're moving through it a lot faster. And some of them are going to be slower. So it's not a set amount of time to that point of it. Um, yeah, I don't know. Like it's going to be what they need, and we're just going to sit down and work together.
Hmm.
So where I'm going to go is I'm going to say, hey, watch the first 4 videos. So learn market analysis, deal analysis, setting up your teams, hiring contractors and property managers, and an overview on systems, so that you understand what we're trying to do. And then let's just get on a call, and they're going to have a feel. Like this is I feel like I want to do flipping. I feel like I want to do a BRRRR. I feel like I kind of want to do this. And then I'm like, okay, now watch just this one video and then let's do another call and then let's start doing it. Let's build your team. Let's sit there and you come back with to me. You're like, and some people can do that every week and some people it takes them 2-3 weeks to do that. But there's progress and it's about setting the next one and the next one and you're working your way through it. Some people are, they're really motivated and you can give them multiple tasks or multiple videos in a week. But if you're saying how long does it take per week,
Or maybe how many hours they need to invest before they do the first deal, or
yeah, so it varies too about their experience. But a lot of times you're like, hey, I need to know how to do, I don't know, a subject to, right? So you watch
love subject to.
yeah.
Sorry, if a listener doesn't know subject to, can you explain subject to? Because I love the strategy.
So subject to is in simple terms is just taking over an American's mortgage, right? Just
Isn't it the best?
yeah, it's going to be in most cases the cheapest interest rate you're going to get, especially as a Canadian. They're going to stay on the title of the mortgage. You're going to take the title. You're going to split the title and deed. So you're going to take the deed. They're going to keep the mortgage on their credit, and you're just going to pay them through a servicing company or pay the whatever. There's different ways to set this up, and you're basically going to take over their mortgage and just run the project out. And I do love them too. The hard part I have is making the numbers work. A lot of times they haven't had that loan long enough, they leveraged it and bought it at 90% leverage, with a FHA or a VA loan, and you're like, you guys overpaid for this, and you're like, how do I make this work? And sometimes it's and sometimes that it's not a walk away on those. We're gonna go down a side tangent, but that's not a walk away issue. Whenever that it's bad, because you think about it, like if you're gonna go get a DSCR loan, pay your $5,000 in setup fees, you're gonna do all this stuff. Maybe it could be even just like you're using it for a short period of time. Like it could be I'll go raise the money to do the renovation, fix this project up, go through it and just release them from the project. And guess I'm not going to save myself from going through the whole loan setup project. So sometimes it's just a pivot. And I think that's the one thing there's so many different strategies in the US than there is in Canada.
Yeah.
And if you learn
way more creative,
you won't throw stuff away. You're like, hey, I can't get this for the right price. Well, maybe there's something else in this. Maybe I can go a different angle. And if you don't know all the angles, then you just throw it away, right? So many wholesalers do that. They just want to buy stuff for, a discounted price so they can reassign it. And if they can't get it, they throw it away. But like the good wholesalers, they'll go and negotiate. Oh, I can't get that. Maybe I can work out a seller finance deal on this or a sub to, and then I can assign that. And they're starting to do that. Like the wholesalers are getting a lot smarter and you're just not throwing so many products away.
About 2/3 of our clients at Share are doing a subject to, also in combination with seller leaseback. And then oftentimes they're signing leases for like 6, 10, 12 months as well. They're actually giving that rent up front. So it's quite the sweet deal for a lazy investor. I know it's not sweet enough for you, but
I've had some where I've gotten prepaid rent ahead of time, and you're just like, if you have, it's something that shows up as a seller credit on your, settlement statement or your HUD statement, and then you have to have that money to pay it, and you're like, you just didn't put as much into the deal off the start because it shows up as a credit, and then you're just like, man, I have to pay this mortgage now for the first. If you haven't planned for it properly, you're like, hey, I'm paying mortgages now. You're like, that doesn't make any sense. You're like, because I got all those credits ahead of time. You did
at least the mortgage payments are way smaller than anything in Canada. Like we're picking up properties like under 250 all the time, right? And that's a really nice house, right? Like, where in Canada can you get a house for $250 American?
I don't know.
I don't know, right?
Out east,
And
maybe? I don't know.
but even I don't even think so. I have a friend from Newfoundland. He's telling me what he pays out there. And but again, we're still in major centers, right? We're talking about Atlanta. We're talking about Houston. We're like, people, they have NFL and basketball teams, and sometimes hockey teams too, and baseball teams. Like, this ain't out east Canada. Glenn, we're running out of time. Can you tell us a bit about the show, the podcast, and also your coaching services?
Yeah, so we'll start with the podcast. So I've been doing the podcast for 8 years as of last month. Every single week, I interview a guest. Started off by doing it solo. That's exhausting. So I interview a guest. I find, in all honesty, a lot of people that are in it, are students, and like a lot of that. We tell stories about buying your first triplex, buying your first single family house. You get the odd person that comes in and talks about buying like these really big ones. More of the little stuff resonates with more people. You get a lot more clicks on that, but it's just, we educate for free. And if you want to watch, what is it, 400 and something episodes, you can do that, and you can get a lot of information. The easier way is to do the coaching program, get someone just holding your hand, looking over your shoulder. Like I said, there's not a limit on calls. We do one-on-one calls. I do want to do a call with you before you even sign up, because I want to make sure you're a fit. Because in the past, there used to be a sign up link and people just sign up. And I'm like, we need to talk first. I want to make sure you want to be here. But yeah, so I think mine's a little different, because I want to do is help people through the whole process instead of spending my time teaching them how to do it. I've already recorded the videos. It used to be a 29 video session, and we're now up to 101 that are in the course. And so,
and they're all supposed to watch them all.
No,
Oh.
That's overwhelming. No, it's a lot of times it's like, however specific you get. And then sometimes there's just issues that come up, and then we make a video on it. Like, if you get a tax lien, how do you get the tax lien removed? Like, if you get this issue, how do you get, and you start off with like, this is the general course. And then over time, there's situations happen. Someone forgets to pay their taxes. A contractor puts a lien on your house, right? How do you verify? How do you get rid of that? How do you sue someone? How do you do a civil suit? Like, it starts to get more and more detailed, because stuff happens. It is real estate. There is going to be people who don't do what they say they're going to do. And a lot of it's just collecting the proper information to be able to do it. And if you have that, then what the next steps are to get rid of it. So the course just keeps building, because there'll be a little nuance to something. So you'll be like, this is how you do deal analysis, but then this is how you do it on doing a turnkey, and this is how you do it on each different thing. And they're like, well, what happens in seller financing if this happened, right? What happens if this happens? And it just keeps getting more and more detailed. And I do a lot of videos, even with myself, doing deal analysis on properties that I actually buy. And I think people can relate to that a lot more than, this is just how you do deal analysis. Whenever they actually see me go through pull comps, look through my apps that I use, they can relate to that a lot better.
Right. Kind of like they're shadowing you through a deal.
Yeah. And sometimes it's like we're doing it on our mastermind call, where we're actually doing it live and I'm actually buying that property. And sometimes it's like, it's a deal you're just watching the video of a deal I did 3 months ago. And, because sometimes hey, I want to know how to do a sub 2 and how to know how to negotiate it. And so go watch the video from when we did one, right? And how we talked, what we said, how we ran our numbers, how we determined that would be the best method. Yeah. So.
Fantastic, Glenn. Oh, I wanted to share. I have one data point for you that I wanted to share.
Sure.
So I've been in my new business of we do wealth planning. I in my consultations with people, they ask for a referral for a lawyer for a will. So very, very, anyone listening to this show probably has to absolutely have a will. So these people either don't have a will or it's not updated. So they ask me for a referral, right? Yep. So I send them to my lawyer. I say, you can use it however you want. This is just my lawyer, right? Again, they've asked for this. I had lunch with my lawyer like 2 weeks ago. I go, how does referrals work out? You want to guess how many people followed through? So again, you need a will or your will's outdated. So you basically need a will.
Right.
You've seen this. You've coached people. How many people follow through? How many people think followed through and actually got a will done?
How many did you send it out to?
10. I
How many?
sent 10.
10?
10 referrals I sent to a lawyer.
3. 3
One.
goodwill? 1.
And also, sorry, the other data point I wanted to share was I was actually at a lunch and I sat next to the owner of Thinkific. What learning platform do you use for your school, your online school?
Oh, I used to be on
Kajabi?
Think. I
Okay.
used to be on Thinkific, and then I moved it over to Profit Flow right now.
Oh, cool. I haven't heard of that one. So what I wanted to share was I was having lunch with the owner of Thinkific, and he
Yep.
told me like 90% of people who buy courses finish or do not finish.
I bet you it's low.
90%, 90% of people do not finish the course, right? And so that's what you're trying to do by screening people first. Like, I need you to finish the course. If you don't finish the course, you're going nowhere.
Okay, so last thing, but like we just started an E2 visa subgroup of the thing because I wanted there was only like 2 people that messaged me and said, "Hey, I want some help with this," and I said, "Okay," but I'm like, "Hey, I wonder if there's we could just do this like some of the stuff is general off the start, and then we'll do one-on-one afterwards, right?" And so I reached out to we have a WhatsApp group with everyone in it, and I reached out to the group, and then we had 19 people show up. So like even for that, I don't want to waste my time or their time. So off the start, we're going to do screening. So it's like, this is what the attorney costs. This is what the investment in the US is. Can
Yeah.
you
Good.
say,
Set the expectations.
yeah,
Beautiful.
can you say you're going to do this? Because otherwise, you're wasting your time working on all this if you're not going to follow through with it. Right. So what I want to do is that I want to, like with everything, you just set expectations before you start, and then we're going to go and do the whole program. We'll do like a regular calls, and off the start, it's going to be pretty general. Everyone do it. Once you get into personal information being in there, you're like, let's do one-on-one. That makes more sense. But anyway, that kind of same sort of thing. I'm trying to eliminate so many people just not doing anything.
And it's not a judgment of people not like in action. I find people generally are just way too busy. Like
They are.
you're a dad, you got a business. In general, I just find people are way too busy, overloaded, and that's why something as important as a will is not getting done.
Well, that's why they're doing it, because they're so busy that they see this as a way to do what I do, like where they don't have a job and they just do this full time. And that looks more appealing until they realize there's still work involved in doing that. Yeah, so totally agree.
Glenn, can you share what is the investment dollars for someone to get an E2 visa in case anyone's interested?
Well, this is going to something that changes, and it also changes by attorney. But I don't know if I want to throw numbers out there because it's going to be, but basically you can probably get one for around $10,000, and
Right.
some attorneys will charge you $60,000 for the same product. Um, so it varies from 10 to 60, and kind of anywhere is in there. And that's just the attorney fees. And then it's going to come down to what that attorney believes is a significant investment in the US, because that's how it's written. And some attorneys see that as 100,000, some attorneys see that as $40,000. And so it's, like with all of this, it's a whole, every time you're interviewing any part of your team, there's a whole list to go through to make sure that this is the right person to work with. Yeah.
Yes, I think everyone needs to remember that. And
Yeah,
people
not
listen,
just the
yeah,
price. It's not just the price.
it's not
It might
just
be
the
the time
price.
commitment. What are they doing for you? What do you have to do?
Yeah, and who can you trust? I don't know if you saw the news. I think it was yesterday. It was announced the owners of Fortress have been sentenced to 5 years.
No, I did not.
If you remember Fortress, right? Syndicated
Yeah,
mortgages. Yeah,
yeah.
yeah. So it took like 9 years for the staff, 9 years to get sentenced.
Wow.
Crazy, eh? So my point is that for anyone before they get into anything, understand white collar crime is not prosecuted very well. so, so, so it's first off, I'm glad to see there's justice, but understand there's a lot of people where there will be no justice.
That's horrible.
Yeah.
That's horrible.
But again, like that's what I want the listener to understand is like, there isn't much recourse is my point.
Yeah,
Right.
you do your own due diligence
Yeah.
beforehand. And I would much rather work with you beforehand than you come bring me a problem and have me try and fix it. Because I have people that sign up for the course. Those are the ones that sign up without even looking at the thing because they know I'm going to one-on-one help them. Oh boy. Some of them got themselves in pickles. And you're like, I wish you would have came to me first.
Yeah, it's I've done the things like that too. Just jumping with both feet without really thinking about it.
Yeah.
Glenn, where can people find more information about you and your coaching, your podcast?
Yeah, at Canadian Investing in the USA.com or glensutherland.com, one N in Glen. There's a spot to book a call. And honestly, even if you just want to book a call and say, hey, Glenn, how do I do whatever? I answer questions. I'm not like some sort of closed book. I think people get the value from doing my course from the implementation. If you have a question on how to do something, reach out. I'll help you.
Glenn, very kind of you. Thanks again for doing the show.
Oh, thank you for having me. This is fun.
Oh, sorry. I want to. Sorry, before we go, can you share any final words, any final thoughts you want to share to the listener?
I don't know. Go do it. The biggest regret you're going to have is that you wish you have done this 5 years ago. I have students that just joined at Christmas and they're like, I've been watching your show since day one. I don't know why I've never done this. And you're like, I'm like, you could have left your job twice over by now, 4 times over by now, you know? So it just gets started. If that's your goal, if that's your dream, start on it. Even if it's to learn guitar, go start on it. Don't wait.
Thank you, Glenn.
Yeah. Thanks.
All right, friends, that wraps up another episode of the Truth About Real Estate Investing show for Canadians. Hope you got as much out of this one as I did. Remember that whether you're just starting out or a seasoned investor, there's always something new to learn, and it's always about building that practical knowledge base that gets you closer to financial freedom. If you found value today, please do us a favor and leave us a review or a rating, share this episode with a friend, or better yet, join our community of real estate investors who are taking action and making moves. And hey, if there's a topic you want us to cover or there's a certain guest you'd like us to have on the show, drop me a line. My DMs are open on social media. Reply to this email that this has arrived on. I'm not hard to find. We're all about getting you the unfiltered truth to help you on your journey. Thanks again for tuning in, and we'll see you in the next episode. Until then, stay smart, stay curious, and keep building that future. Catch you later.